Imagine seeing someone you fancy, but you don't have the courage to ask them out and then someone else does. Or not going to a party only to see numerous pictures of all your friends having fun there later on social media. Now imagine this, but instead of a party or a date, you lost out on thousands of dollars. That is the crushing feeling of fear of missing out, or FOMO as it's more commonly known, and the feeling many are probably having at this very moment due to Bitcoin. Hi, I'm Sam Breakgear, and you're listening to Brains Byte Back, your podcast looking at the intersection between psychology and technology. In today's episode, we will explore how this FOMO, alongside other psychological factors, influences the price of Bitcoin. You will learn what are the biological mechanisms that happen when we are having FOMO, how the news influences public opinion of Bitcoin, and the different types of Bitcoin investors and what separates them psychologically. Joining us on the show is a full-stack software engineer and Bitcoin fanatic who has closely watched this space since 2014, Federico De Faveri. Originally from Italy, Federico is now based in Miami and is the co-founder of Keen, a full-service digital agency. We discussed how pump and dump scams work in the crypto world, how trading bots with stop losses create a domino effect that can lead to price dips or rallies, and the best way to find trustworthy Bitcoin news. But before our chat with Federico, we're going to take a step back to briefly understand how Bitcoin works, how it is mined, and the technical factors that influence its price. To do this, we are joined by Nick Hansen, CEO of Luxor Technology, the largest Bitcoin mining pool in North America. Nick shares with us an analogy to better understand how Bitcoin works, how mining influences its price, and what a Bitcoin halving is. And stay tuned to the end where we ask both experts what their predictions are for Bitcoin's price in 2021. Now, if you like this episode, some other Brains Byte Back episodes you might enjoy are how online casinos bet on addicts through psychological ploys, the impact of gold and crypto on global currencies, and one of our oldest episodes, Getting Started with Bitcoin with Jack Dossman, the founder of Crypto Beginners. You can find all these episodes and more on Spotify, iTunes, Google Podcasts, Podcast Addict, or wherever you listen to your podcasts. You can also find us on YouTube under the Sociables channel. Just search Brains Byte Back and we will be there. And make sure you subscribe and follow us to never miss an episode. Now, on with the show.
So my name is Nick Hansen. I'm the CEO of Luxor Technology. Prior to building Luxor, I was a lead member of technical staff at Salesforce, working on Einstein, which is effectively Alexa for Salesforce. We started building Luxor in 2017 with a very narrow vision, which was just building mining pools for some altcoins, coins that are not Bitcoin, that we thought were high quality. Some of the ones you may have heard of, like Monero or Zcash, Scicoin, Decred. And from there, we started to realize that there's a pretty large disparity in the market that we could start to capitalize on, which is this idea that a hash rate, when I say hash rate, that's the computing power that's actually mining the coins, could be traded. It's a liquid asset that can be moved around between buyers and sellers. So that's what we're working on currently, and we think this is a pretty revolutionary idea. And we have a lot of people that think that as well. One of the side effects is that you'll eventually be able to build derivatives marketplaces based on this. So in the same way that oil, has futures and big oil producers hedge their bets on oil, we'll be able to do the same thing with hash rate producers or compute power producers. They'll be able to hedge their risk in the market. So if the price of Bitcoin goes up or down, their bottom line can be less affected in a very same way as oil. So that's an intro to Luxor. That's an intro to myself and a bit of the background and some of the things that we're working on.
Super. Well, thank you for joining us today. And I'm really pleased to have yourself and your knowledge on the show because I have a real interest in this. And I'd love to kick off with the most simple question, especially for anyone listening that maybe doesn't know much about Bitcoin. Can you give a brief, simplified explanation of how Bitcoin works?
And I think the best way to think about Bitcoin is imagine your checkbook. Maybe some of the younger millennials and zennials may not know what that is, but we used to have a checkbook, and you would put in if I needed to pay somebody $100, I would debit my account $100 and credit their account $100. And so at the end of the month, my checkbook account should always add up to zero, or whatever's left over is my balance. In the same way, the Bitcoin network is effectively a ledger. It's called a distributed ledger that has all of the transactions that everybody has. So for a particular person or address or an account in Bitcoin, you can go through and see just how many Bitcoin that person has, because you can see where they received Bitcoin and where they sent Bitcoin. So that's a very basic explanation of how Bitcoin works. And all of this is transparent and open, and you can look at all of this data. And so when I tell the network that I'm sending you 10 Bitcoin or whatever, that's $400,000 now, but when I send you, 0.1 Bitcoin, the network all agrees, everybody sees, okay, this person has the Bitcoin to give, and the other person, the address is valid, and the transaction, all of the parameters of the transaction are valid, and they all agree, and that's called the consensus. The distributed ledger and consensus are two very important concepts in Bitcoin and crypto as a whole.
Fantastic. And yeah, I think that checkbook analogy works for anyone that understands checkbooks. You summarized it very well. But there's another aspect that we're going to talk about today, which is something that I know you specialize in, and it's Bitcoin mining. And I'd love to know if you're able to explain to us, why is Bitcoin mining important, and how can it impact the overall value of Bitcoin?
Yeah, so Bitcoin mining and crypto mining is something that's very near and dear to my heart. Built a company around it, have been doing it for a long time. What that really, at the end of the day, means is somebody is expending energy to verify that your transactions are valid. There's a lot of complexity in this. It's a very, very interesting economic game theory problem, because as more and more people are attempting to verify, it becomes more and more difficult to actually earn the rewards. It's a parameter called the difficulty of the Bitcoin blockchain. The same way that we all agree that your transactions are valid, we all agree what the difficulty of the network is at any given point in time based on all of these parameters of the network. And so as the difficulty increases, it becomes more and more difficult to mine that next Bitcoin. And so what that does is that incentivizes people to compete and generate Bitcoin at lower and lower costs. Actually, right now, really interesting with the latest hardware, the best hardware that you can buy, and 3-cent power, which is pretty low, but in Bitcoin mining, that's about average. In institutional grade Bitcoin mining, that's about average. You can mine a Bitcoin for about $3,000. So you're looking at very, very nice margins right now. But to get there, to get to this point where you're now mining Bitcoin at a very large margin, you had to go through the trough of sorrow, which was 2018 and 2019, where the price of Bitcoin was not much higher than that $3,000. And so it's a really interesting problem that big miners these days are trying to figure out how to game. And along with these hash rate derivatives, some of these financial instruments that we're thinking about bringing to, or that we're going to be bringing to the market, it'll help flatten disparity a bit. So instead of, they may sell forward some of their potential profit in the future to bring that profit into the books now. That's something that will help make mining a lot more economical in the future. Now, how does that affect the price of Bitcoin? It does set a very effective floor, which we did see in March. Like when we hit March of 2020, I should say, when we hit just under $4,000, around, it was like around $3,500, the market immediately rejected that price and started buying up Bitcoin. And I think that is fundamental to the cost to produce a Bitcoin. Miners are not going to be interested in selling at a loss, so they'll just hold, and they're incentivized to do so because they've made millions and millions of dollars of investment selling their Bitcoin for a price that they think is suboptimal. It's definitely not something they're going to do. So it's a bit of a long-winded answer, but I think it required a bit of a background on how Bitcoin mining actually works, how those big swings in profitability affect the price. And then at the bottom line, I think, knowing that the price of Bitcoin is affected by mining and how there is that effective floor by mining is important.
No, I think you did a good job. It's, like I said, it's a complex topic, and you got a short time to really nail these answers. And I think that summarized it well. My last question to you, it's something that I've come across myself and that I don't have a strong understanding of. So I'm looking forward to you really educating me and the rest of the listeners here. But what is a Bitcoin halving, and how can that impact the value of Bitcoin?
Sure. The Bitcoin halving is something that is pre-programmed into the Bitcoin protocol to happen approximately every 4 years. And what is actually halving is the amount of coin that is mineable at any point in time. So at the very beginning of Bitcoin, the block reward, which is what these miners are competing for, is 50 Bitcoin. And the blocks are about every 10 minutes, and the difficulty adjusts to make sure that the blocks happen. As more miners come on, the blocks are found faster. As difficulty increases, then the blocks become found slower. But then every 4 years, this number decreases by half. It's called a halving event. It's become somewhat of a cult following recently amongst the Bitcoin natives. And recently, we had our last halving, and we went from 12.5 Bitcoin per block to 6.25 Bitcoin. So every 10 minutes, about 6.25 Bitcoin are emitted to the network, and the miners capture that value. And what we have seen traditionally, Bitcoin is not a very mature asset. It's only been around for 10-ish years. We have this big consolidation period prior to a halving, which we saw. The 2020 halving was in, I believe, May of last year. Prior to that, we saw a pretty large sell-off from its previous all-time high of around $20,000. The price of Bitcoin continued to consolidate, and then that halving event is somewhat of a catalyst for what we call the bull run, the next bull run, which we are somewhat in the middle of now. It takes about 18 months to play out, and then we go into another consolidation period post. And so we're in the middle of that now, and we're experiencing this for now the fourth time. Well, it depends on how long you've been around, third or fourth time, and I think we will continue to see this, though. I believe, in my opinion, the swings will become smaller and smaller, just due to people becoming familiar with this asset and it absorbing some of the value that it's supposed to be absorbing.
Now that we've briefly covered how Bitcoin works, we speak with Federico to understand the psychology that influences its price.
My name is Federico, and I'm a full-stack software engineer. I co-founded a software development company here in Miami, and we build software and we do consulting from all kinds of tech niches. I got into Bitcoin around the end of 2014, which was around the same time that I was getting into programming and tech in general. And I heard about it the first time when I was kind of into domaining world. So I was finding out for the first time that you could actually buy and sell domains and own kind of a piece of internet. Right? I was I was just starting back then. And so I was hearing about a lot of people buying domains, internet domains related to Bitcoin. And so that got me a little bit curious and got me to look into it. And at first, at that time, it was still something like, quote unquote, nerd money. Digital currency was used in some games, I think, like, not even games, like those online communities like Second Life, I think, had an exchange where you could actually get some of these digital currencies. And so I started learning about it, and it was actually one of the things that really got me interested into programming, because I realized how a piece of software can actually, I would say, augment the power of the internet by allowing us not only to share information, which is what the internet allows us to do, but also to send value now between each other, right? Literally sending value, i.e. to pay you, or micro donations, things like that. So that really made me realize the power, I guess, of software, and how a group of people can develop together, even from remote parts of the world. They can remote together something that can be so I would say changing for society.
Yeah, I totally agree. And I have to say that before our call, you raised some really interesting points on this subject of like the fear of missing out when it comes to Bitcoin. And we're going to break those down now bit by bit. So when we spoke before the call, you did mention the biological mechanisms that happen when we have fear of missing out. Can you explain to our listeners what happens here?
Right, exactly. So let's start from a little definition of fear of missing out. There's a few ways to define it, but the way that I like to see it as is a pervasive apprehension that you might feel when you perceive that other people are having rewarding experiences, and you're basically absent from them, right? So you get this fear of missing out, which basically, what are you missing out on? Think about it. You're missing out on dopamine, right? Other people are having these crazy, dopamine experiences, and you're just missing out on them. And our brain is wired, right, to chase dopamine. That's how we survived, and that's our most important survival mechanism. So you can imagine it's a very strong feeling. And now obviously you hear FOMO everywhere. Millennials use it all the time, also like in very colloquial phrases.
Yeah.
But in our particular context, which is finance and Bitcoin, is particularly a strong force because it's not about like in the context of social media missing out on parties or missing out on events, but it's actually it touches your your wealth, right? Your inner survival or your instinct. So imagine you maybe heard Bitcoin before or you never, and you have this friend of yours or somebody that you know that suddenly starts getting quote unquote rich or start earning money because he bought Bitcoin before you or something, and now the price is going up. You start seeing all over the news. Now what happens is that you start getting feelings of anxiety, exclusion, isolation, because all the things in your head, like why is that, especially as a person you consider an idiot, quote unquote. You're like, oh, why is that guy now having, getting rich, or why is he having so much luck and I'm not. I'm so stupid, I didn't, I thought it was not a good idea, but now I probably should. So you start having this crazy tornado of emotions, and so your body is under stress, right? When we're under stress, we release cortisol, release cytokines, so these signaling messengers in our cells, and we get into this state of big discomfort, right? So psychological and also physical, because anxiety is very strong in this case. Because we're talking about wealth, right? We're very sensitive to that. And so, how do we ease this, Sam? We jump on the train as well. We rush and we buying in also, so we can, first of all, escape the isolation of being maybe the only guy that haven't bought in yet or haven't eased the isolation. And then the whole dopamine rush that comes with joining this new exciting tech with all these people. There, everybody's making money. You check the price every morning and it's green, and so this way, you ride this kind of dopamine train for a while, and then eventually it happens that the price crashes or some event causes the price to fall or something. And that's where we go from a state of FOMO, right, from fear of missing out, to a state of FUD, is called, which is fear, uncertainty, and doubt.
Yeah.
And so this is especially true, this gets amplified by the media and the news that we see around. So especially in times when price crashes or things are not going so well, media tends to amplify that feeling, and so the person is in this state of FUD. And what happens when we have fear, the psychological level, we have a fight or flight response, right? And so what do we do in the situation? Now we're holding an asset that is crashing in value. We're having crazy fear because we don't want to lose more of our investment. And this is especially true for people that acts upon greed. And so they don't quote unquote invest something that they're willing to lose, but they go maybe the extra, just to, because they know they can make more. I know that this is going to be, easy and fast. And so with this fear inside you, you have this fight or flight response at the biochemical level too. And what do? There's nothing to fight really, right? Because what you can punch the graph and get your money back. So you withdraw and you sell and you get your dollars back at a loss, and that translates a whole into a terrible experience, and into a whole journey that started with a FOMO that escalated through. And this is like kind of like the classical Bitcoin investor story, especially like the average private person.
Yeah. No, I completely understand what you're saying, especially for the FOMO part, because even though I'm not someone that has been completely outside of Bitcoin, I bought in 2018, and I actually sold it earlier this year earlier last year in May 2020. And even though I sold it at a profit that I was happy with at the time, now that this is like risen up, I'm like, oh man, why did I sell? So
Exactly.
I definitely have that FOMO feeling, and I absolutely know about that.
And it's always, at the end to look at the past and say, oh my god, I should have done this, it's way easier. But then
Yep.
when somebody's in the in the moment, in the present, it's a very unpredictable, and it's a mix of emotions.
I think you summed it up. Unpredictable is definitely the word there.
Absolutely.
Yeah. And you also mentioned the psychology of different types of investors. and how this impacts overall investment in Bitcoin. Can you explain for our listeners the different types of investors you're talking about and what separates them psychologically?
Right, exactly. So what we went over, this kind of cycle of FOMO, FUD, and this whole kind of journey is a good example of new buy, of like a kind of a new investor. Because Bitcoin is not like a regular financial market. By regular, I mean stocks or commodities or anything a bit more traditional. Because it's very volatile. From one day to another, you can have spikes of 10, 20, 30% maybe, or like something that is like absolutely not common in the regular financial assets. So it's high volatile, therefore it's a high risk, high reward environment, and it's open 24/7. So there's really no breaks. So maybe the only thing you can compare it of as a traditional finance instrument is a penny stock, right? Something that is very, crazy, that doesn't have, but penny stock don't really have a good reputation, right, in the finance world. So for this reason, since Bitcoin is this kind of market, it attracted a lot of new buy investors. And what do I mean by new buy investors? Is that people that are not emotionally resilient to go through even stages that we discussed a bit before. So because a trained investor, a trained person in finance will not let himself be driven too much by all these emotions. Why? Because they have received formal training usually. They've read about other experiences like this, so they're educated about this kind of psychology of the markets. And so how do they prevent to act erroneously? Is they have a plan, right? So they decide before, I'm going to do this trade, then I'm going to hold it this time, and if this happened, then I'm going to do this. If not, I'm going to stop my loss at this point, which is okay, because if I make 10 trades, I can afford to lose a few. And so then you have a kind of a battle plan, and you go into the battlefield with rules, and you discipline yourself to not sell before when you plan to, or you act like you planned. And this is something that takes a lot of discipline, and I think that's what separates what I call like a new buy investor from traditional, more seasoned financial investors.
I completely understand what you're talking about. It's almost like you have to override that instinct to think, oh no, I'm losing, get out, or like, oh wow, I'm winning, get in, or like you have to like really
Exactly.
be able to like hold down and not give into those emotions. And they're hard to because it's kind
Exactly.
of like a real gut feeling. It's very innate. I mean, it's the product of thousands of millions of years of
Yeah,
evolution. So it's hard to
very
override that.
primal.
Yeah.
Very, very primal.
I would love to know though, how does the fact that Bitcoin is unregulated impact its price?
Right. So it is very regulated. Now it's starting to be, it's getting regulated a little bit more each year. We can still say that it's pretty unregulated. We're on the edge, I think, to having, because now we have taxation. We're starting to see legislation, and people starting to understand it. But especially the first years and the first bubbles, it was the wild west. So what does lack of regulation results do? First of all, that it's super easy to sign up and get certified and ready to trade on platforms. This is actually a pretty big factor, because you don't have to, like, if you want to trade stocks, you go through a process, you verify your ID, give a bill of where you prove where you live, and then it takes 7 days, and then you get approved, and then maybe there's a minimum deposit of $1,000 if you want to trade some stocks, etc., etc. So see, the barrier of entry is you need to be pretty motivated, and maybe say, I want to be a trader, I want to do this, seriously, and then you enter into this field. But with an unregulated asset like Bitcoin, literally an email and a password, and you're inside the platform, an exchange, right? I'm talking about, again, early Bitcoin years and early exchanges, because now, again, they're catching up. They're, especially the ones that deal with dollars too and euros and the fiat currency, they stepped up the regulation. They asked for ID, etc. But let's talk about other exchanges, the unregulated ones, where it's super easy again to sign up and get certified. And so you literally have no friction to enter this market. And maybe even no minimum investment. You can get a PayPal of $30 and start buying a little bit of Bitcoin, and that's it. So this means that it's much easier for a mass of people to flock into the market and start bringing liquidity, right? Especially as we were talking before, the kind of investors that are more new buy and they have a big optimism on easy wealth. The fact that there's no regulation lets them sign up immediately and trade immediately. That's a big factor affecting price for sure. Another thing about regulation is that since you don't have a stable legal framework that sustains this currency, what happened was that there were major legislative moves. For example, there was I'm talking especially about nationwide bans that happened. For example, Russia banned cryptocurrencies at some period, China banned cryptocurrencies at some period. And so the fact that an asset is unregulated, it means that big laws can come into effect, and that, come on, you can imagine, like, if you are holding something and it becomes illegal from a week to another, maybe if you're kind of trust your skills as a tech guy, something, you'll still hold it, maybe you'll transfer to a more secure wallet, something like that. But if you're not, you don't trust your technical abilities so much, which is fine because nobody is supposed to be a hacker, then obviously you're gonna be in a situation where, oh my god, it's illegal, I should probably sell them, get rid of it, and all these things. So obviously this affects the price. And I remember in the early years, there was really communities of people gathering in forums and waiting for the midnight of that day, a certain hour, to see if China would pass a law or ban it, because they were ready to, like, make trades. Another two aspects of the non-regulation is also the false advertisement that Bitcoin brought, and the fact that it was very easy to get away with scams. I could set up a fake investment fund that has a beautiful website and explains you how we have a secret algorithm that generates profit, and if you invest into it, we'll share with you, these things. A lot of people did a lot of these scams and a lot of pyramid schemes and got away with it simply because, again, there was not enough regulation to effectively, go after these people, and or at least not allowing them to take investors' money. And then one very interesting aspect of not being regulated was the altcoins, right? So what are altcoins? Altcoins are alternative cryptocurrencies, right? So Bitcoin was born, and naturally people take that project. Some people take that project, and their instinct is, how can I make this better, right? How can I make my own Bitcoin or something? So altcoins are generally categorized, between I mentally categorize them into the not innovative ones, the ones which, yeah, maybe they took code from Bitcoin, but then put their own engineering into it. And this is true with things like Ethereum. But for example, Ethereum is an altcoin that brought some innovations. But what I want to get is that a lot of other coins are simply a copy of Bitcoin, because Bitcoin is an open source software. So you can see the code, you can see so naturally you can copy, change the name of the variable of the software and call it Federico coin, run it on a few servers, and then I created my own decentralized little currency network, right? But have I done something innovative, something nice? No, I just created a clone. So that means that I created a less liquid market than Bitcoin, so my own coin, and that allows people to run what are called pump and dump scams.
Mhm.
And so, again, because of the lack of regulation, it's easy to have these very tiny and illiquid markets where you even see celebrity endorsements, right? The actor, the athlete that says, buy this coin, and wears the T-shirt of, the coin, and then everybody jumps and buy this coin. And what happens is that the ones who was taking the coins originally, they just dump it. They just dump the price, and so the people that bought in end up with worthless tokens in their hands, and the people that bought in have the dollars that they literally sucked in from them. And so this is definitely a consequence of not having of the unregulated world. So lots of scams, lots of not too many boundaries. Also, I mean, in your bank account, something happens, you have somebody that you can call, right? And you can tell them, listen, this happened, what's going on? But with Bitcoin, it's really your cryptographic key, your wallet. That's it pretty much. So
yeah, it's your responsibility. I think when you mentioned the Bitcoin scams, the one that comes to me, and I think it's become a bit of a meme, is that BitConnect with
boy,
that
yeah, that's so
super
funny.
charismatic, I wouldn't even say charismatic, energetic guy on stage,
Yeah.
especially when he's like, this is not a scam. People say this is a scam. It was a
Exactly.
scam. So yeah,
Exactly.
that's the first thing that comes to mind. But
Oh yeah.
one thing that really stuck out for me that you mentioned before the call is how trading bots stop losses can create a domino effect that mixed with non-savvy investors creates crazy price dips and rallies. Can you explain to our listeners how this works?
Absolutely. If I have to right now write a bot, that a bot is a software, right? It's a piece of code at the end of the day. If I had to write a bot that interfaces with some banking, right?
Mm-hmm.
If I have to write a bot that interfaces with some kind of banking service, some kind of banking software, I have to go through a lot of hoops. Maybe I have to go through an ID check. My company has to go through a check itself of our background checks, etc. My own software needs to have certain encryption standards, right, by law. So I need to have certain criteria to meet in order to write a software that will communicate, do anything they needs to do with some highly regulated. Now let's go to the opposite example. Highly unregulated environment, right? To answer this question, we can kind of I can make a metaphor, right? And let's make a soup together. Usually these exchanges, just like you just log in with email and password, they would give you a secret password called an API key. And with that, you could literally write code and write software, plug that key inside your software and interact programmatically with those. For example, we're talking about exchanges here right now, right? Bitcoin exchanges. And so I could easily write a bot that every second, every 5 minutes, every whenever I want, checks a few financial indicators, checks maybe the sentiment of tweets with the hashtag Bitcoins, whatever it does, whatever my algorithm does, and then makes a trade, buys, sell, without me doing anything, right? Without me physically pressing the buttons, right? So very easy to make kind of custom software to interact with this thing. And that's one ingredient for our soup. This soup is called the Bitcoin price. Now the second ingredient would be that we have these exchanges, again, also due to the fact that they're unregulated, they always have crazy leverage available. What is leverage? Is when on a financial asset I want to invest more than what I have. So I use this instrument called leverage, which means I borrow money from a pool of liquidity. And so now instead of having $10 to invest, I have 20, which means that if the whatever I'm buying goes up in price, I'm earning as if I invested $20. I don't earn as if I invested $10. Well, the opposite is also true, though. If the asset loses value, I lose a lot more value. We're talking about leverages of 10, even 50. A platform we had it for 100 times. So this is definitely another things to keep in mind. Now, the third ingredient is Bitcoin market has no trading halt. Apparently, like Wall Street has trading halts. So if something big is going on in the world or something that can negatively affect the price of stocks might happen, then the stock will close to prevent literally people from getting big damages. And then the fourth ingredient of this is the fact that these non-savvy investors are ready to act with these emotions, and they have, some of them are maybe programmers. They made these bots. They have these things. So let's put all this together, and you have a recipe of disaster. Why? Because you mix everything together, and you have these non-investors, right? You have them using crazy leverages because they want that high risk, right? High reward. They're greedy. Then you have trading bots, which literally are programmed to act without any human, that can do anything. And then you have no trading halts, right? All these ingredients. If you put them all together, you see that you have a recipe for disaster, because now, let's say the price crashes a little bit, it triggers some sell orders from some bots, and that lowers the price, because obviously if somebody's selling, that lowers the price even more, which trigger more bots to sell and more stop losses from other investors. So that is what really makes those rallies, those big dips, is that really creates this domino effect that, mixed with these circumstances, it amplifies really much compared to traditional financial assets.
Yeah, I suppose that kind of shines a bit of light onto what we're kind of seeing now potentially, and what we're experiencing during this crazy time for Bitcoin.
Absolutely.
So my final question to you relating to Bitcoin FOMO, I'd love to know, how does the news influence public opinion and ultimately the price of Bitcoin?
Right. So the news, it's a love and hate relationship for somebody that is a Bitcoin user or Bitcoin enthusiast, because love, because I'm grateful that Bitcoin got on the news, right? That it got on a headline of CNN, it got on a headline of Forbes, because without the news, without these outlets, the word would not spread. Nobody would know about this technology, right? And so it's good that it is in the news, because then somebody might read it for the first time and then research it and discover it, right, thanks to an article. But it's also a hate, because news tend to ride whatever rumors or hype is in that moment. I mean, I don't blame them at all, because it's their business model. They're publishing articles, they have ads, they need clicks, they need traffic. And so, I mean, I don't blame that. But having this in mind, makes you understand why, you kind of see the same patterns when it comes to news outlets and articles that are coming out about Bitcoin. And about the public opinion, they definitely fuel and amplify both FOMO and FOMO, because you see articles like, oh, the 13-year-old kid who just bought a Lamborghini because he was mining Bitcoins, like a few years back, and etc., etc. And that naturally it creates the crazy FOMO inside you. And then on the FOD side, the fear side, they amplify the fear, because, okay, the price is starting to crash, and you see a lot of headlines that are clearly saying, oh, it's the end of Bitcoin, it's over, and it will be worth like toilet paper and things like that. I mean, toilet paper was pretty valuable
Yeah,
months back, so
certainly in
maybe it's not a
2020.
best exactly, it's not a best comparison. But no, yeah, they amplified what's going on in the markets. And another thing they do is they give maybe sometimes like skewed perception of the tech abilities of Bitcoin. So sometimes they'll praise its amazing anonymity, and then you see people that think that the Bitcoin is so anonymous. Like, for example, I've taught a course to law enforcement in Italy a few years back in 2018, and there were a lot of people that clearly thought that they were arrested and were subject to investigation, various types of crimes. And when interrogated, they were convinced that Bitcoin was really anonymous, and there was no way for the investigators to get to whatever they were doing. And a lot of times it was because the news stands, maybe you've read a lot of articles that says Bitcoin is anonymous, and this is a little bit of a skewed perception that the news give maybe on the technical abilities of Bitcoin, because somebody that is more technical knows that yes, it's not that it's not anonymous or is anonymous. It's more about how you move your coins, how you keep your wallet separate, and it's always a cat and mouse game. Also, like if you have an adversary that is motivated enough, it's literally cat and mouse game. Whoever puts more energy into either tracking or hiding the coins. And so, and this is something that, for example, in the news you don't see talked about too much. It's always a Bitcoin is anonymous or Bitcoin is not anonymous, right? It's always black or white. And sometimes it's not that they make these things up, right? I'm not just bashing on the news like crazy. Sometimes the source is okay. They take maybe an official piece of data, but then it's about making it sound
Like
however it
spinning it.
gets you
Yeah.
more. Yeah.
Yeah.
However, whatever gets you to click on that headline, literally. So yeah, maybe an official development release says that we're having there's a little problems with the transaction anonymity because the blocks are being updated or some technical, and that, which basically means that, for example, for a few months or until the next software update comes, there's a little bit of a anonymity issue, and then it will be fixed. But the news again takes this as a Bitcoin is not anonymous, will not be forever. And so I think a pro tip that I can give to anyone that wants to learn more about Bitcoin is obviously to stay a little bit away from the fancy news articles and to the things like this, and go follow and read what the real developers are saying.
Mm.
Because again, Bitcoin is a software at the end of the day, and it's powered by code written by some people. Well, we don't know who's the original creator of the first release, right? But there are maintainers. There's people that maintain and write code. There's a team of, I think they're organized as a non-profit, I believe. But these developers do maintain and do update a lot Bitcoin, and these people are the real source of, I think, the best source of information you can get, because these are the ones that describe the current state of what Bitcoin is able to do,
Mm-hmm.
what it's not able to do. So how do you find these things? Either you find their personal Twitter, their personal blogs, things like that, or there is a, I don't know if maybe I should explain to you this. There's a website called GitHub,
Mm-hmm.
and GitHub is a website, is a web platform where software engineers or any programmer publishes open source code, right? So it's and since Bitcoin is an open source software, it is 100% published on GitHub. And so through this platform, not only you can read the actual code that powers everything, so you can read how transactions get created, how they get approved, how a wallet works, etc., all these complications. And at the same time, you can see the bugs, the errors that are in there, the issues that other people file. You can see the what are called commits. Commits are just new code that gets added, that gets committed to the software. So by looking at this, you kind of get an idea of the current state of the currency. Obviously, it's not super easy information to parse, but it's definitely the the most truthful source, and definitely, yeah, the best source of truth.
And finally, the moment you've all been waiting for, our guest price predictions of Bitcoin in 2021.
I think you will see six-figure Bitcoin in 2021. That is my simple answer. And why do I think that is quite a bit more complicated? I think that we will see that due to increased demand by institutions. We've already seen institutions using Bitcoin as a way to hold their treasury as a hedge against the inevitable inflation that will come as a result of the money printing that occurred in 2021 in response to the coronavirus. Furthermore, I think we're going to see continued demand from countries that maybe aren't first world economies, where capital constraints are in place, and it's very difficult to either move money out of the native currency or move money between international jurisdictions. That becomes trivial on Bitcoin. It's pretty much a non-issue, and I think that demand will continue to drive the value of Bitcoin as well. And without sounding hyperbolic, I think that we could see Bitcoin assume something like a world reserve currency, whether nations decide to accept that or not. It's really up to the people, and I think that's what makes Bitcoin so beautiful, is that it doesn't really matter what anybody in power thinks. It will continue to operate, and it offers freedom to people that maybe didn't have it before. So I don't really care what the price of Bitcoin is. Obviously, my business does, but in the end, the reason I started building on Bitcoin and the reason I'm so interested in cryptocurrency as a whole is the freedom that it offers people. There is no central authority to tell you what you can and can't do, and I think that's really beautiful.
So I'm really focused on looking in 2021 at how the developers are solving these problems of scalability, especially. I'm keeping a big eye on the Lightning Network. And as far as price, who knows what major news can come up, something that can come to my mind is that, let's say that the IRS declares that the taxation on Bitcoin is going to be very high. That's not going to that's not going to affect the price very good. Or at the same time, it can give a very advantageous taxation laws, and that can be good for the price. Really, it's so much entropy that trying to predict something is
It's almost impossible.
yeah.
Yeah.
Not
That-
will be riding the Lambos.
Yeah. We'll see. Nick, I want to know if people want to follow you or keep up with the work you're doing at Luxor Technologies, how can they do that?
Yeah. So my personal is on Twitter. I've got at Nick Hansen 600 on Twitter. I'm pretty active there. We also have at Luxor Tech Team. If you want to follow the Luxor mining team, we post a lot of stuff about more details about about mining, industry news, trends, and then we also have a newsletter on hashrateindex.com that you can subscribe to. We give out a weekly newsletter, summarizes say the last week of mining news. We also talk about some of the cryptocurrency mining stocks, which are very hot right now, and then we go into another topic we call the rig index, which is if you do come down the rabbit hole with us, you'll find that not only the price of Bitcoin is very volatile, but actually Bitcoin miners are just as volatile, or if not more, along with so many other aspects of the industry that is really, really interesting as it begins to mature. So at Nick Hansen 600, at Luxor Tech Team, at Hashrate Index, hashrateindex.com. Find us there, and love to chat with you about this stuff. If you have any questions, feel free to reach out.
If people want to keep up with you and learn more about what you're doing or just hear more from you, how can they do that? Is there a website you can send people to or social media they can follow you on?
Company website, keen.com. We're going to start a blog right now. We're going to publish some technical articles. And then I have my personal website, which is defaverifederi.co, DEFAVERI.co. And so that's my personal website. I blog at blockchainlion.com. I mean, I have a couple of things going on, but the best place is to definitely my personal website, where I'll be updating with where all my links, my portfolio things, and my company website for sure.
Awesome. Excellent. Well, thank you so much for joining me today. I learned a lot, and I hope our listeners did too.
All right. Thank you so much, Samuel.
Tell Me Your Startup Will Disrupt Industries. I'll add you to a list of thousands of other entrepreneurs who have said the same thing and failed. Sure, you believe in your company and its product, but it's one thing saying this yourself and another to have an industry influencer say it about you. And that is the power of digital PR. If you're ready to gear your business towards growth and gain, our sponsor Publicize is a digital communication agency that has helped businesses like yours gain exposure in major online publications for the past decade. To find out more, visit publicize.co/BBB. That is the end of today's show. Thank you so much for listening. If you like this and you want to hear more episodes just like it, then follow and subscribe to Brains Byte Back wherever you get your podcasts. We are also available on YouTube under the channel of our publication, The Sociable. Just search Brains Byte Back and you will find all of our episodes there. We really love hearing from you, so leave us a review on iTunes and on other podcasting platforms to let us know what you think, and we'll give you a shout out on the show. You can also reach out to us on Twitter at @thesociable. And finally, go to sociable.co where you can find all our episodes and plenty of articles on topics just like this. Thanks again for joining us, and until next time, stay healthy and stay safe.